So good morning, everybody. Guten Morgen. I'm really glad to be here in Frankfurt again. I used to be here in the 90s, working with option trading when that was very new. And maybe not all of you know, but Frankfurt was really going in the front of financial technology when they changed this already then. So fintech, is that really something new? We had it for quite a long time already. But it was completely different before. It was more a question of automate the things we are doing. It's not doing it in a different way. It's doing it more efficient. And that has been here for a very, very long time. A little bit new was, like I mentioned, Deutsche Terminbörse, when they started 90. I came down here from Stockholm. The OMX exchange was a little bit earlier out, but they didn't have a fully electronic exchange. It was only partly. But we as a trading company already 88, 89 started to develop software that automatically traded the derivatives exchanges. So it was kind of here already fintech, pretty advanced already then. Although the computing power, of course, wasn't the same as it's today. However, this brought about also a change on the participants. If you think what that business was like, it was the open outcry. And it wasn't the established option market like Chicago or London that brought in the new technology. No, it was a new start with an option exchange in Frankfurt and also the SOFEX in Switzerland that took the new technology and went fully electronic. And I still remember the discussion then, what is the right way of to go. I think we know it today. Another business I've been involved with where you use a lot of technology and also in the early stage was the fund management business. I was a partner of a business that we also had activities here in Germany, Kaj Rönnlund, hedge funds, fully systematic, mathematical models, also trading automatically in a great variety of markets globally. Compared to an equity stock picking fund, that was quite a big transformation. So in that sense, fintech is not really new. But it seems like something is changing. I mean, we are here, all of us, pretty excited today. Have you heard already, is it kind of a boom and bust like we saw then in the 90s? Maybe, maybe not, but I don't think so. If fintech was more of a cost reduction, efficiency thing before, now it's more a question of changing the business models. How we do the business, with whom, which products. And it's kind of, we hear it also, I think, and I agree completely that the market, the customers are much more ready now. Because there is nothing that is so strong as a business idea, which time has come. And I think definitely it has come. We have seen this development already in other markets. I've seen it very closely being also on the board on a media group in Finland. And the last 10 years, we've seen the change coming. It came slowly to start with, and then it accelerated. And it looks dreadful for an old player, although you try to change the business. But it's hard to change the whole way of doing business in a completely new way. And I think this is what we start to see here now. Probably some of the old players would see it, what I saw also in the media, hey, we see the change coming, and what we hear also, you don't have to regulate yet for them because they are so small. But this is changing. And it's an interesting time to see this also. So it's a question that it's changing to who is providing what to whom, and also when. One Finnish company also, I know them pretty well, who's listed here on the Frankfurt Exchange, Ferratum. They said their business idea was actually the price of money is different depending on the location. So maybe in the bar in the evening, 50 euros is much more worth than 50 euros. And it works. So moving on then, fintech is a pretty large area. But If we took a little bit more, I want to take an example a little bit how it's changing the peer-to-peer lending, as that is one of the bigger part in the fintech area. It's really booming. We have 40 billion globally now lended by peer-to-peer lending. General one would think peer-to-peer lending, so that's something with some social things, and it's maybe not a big thing. It's quite big. It's actually going also back to the starting of lending. And why we can manage this is actually technology. We see big players like Lending Club growing very fast. Also, European players are coming in, growing. What's changing here also, we see it also in Finland. It started out with private persons investing into loans. In the beginning, it was very much an ad hoc thing. People were looking, I picked that loan. It's Lady Svensson who wants 1,000 euros for 2 years, paying 10% interest. I picked that loan. Today, it's totally algorithmic, so it's a question you put the areas where you want, and then the robot will take over the whole thing, because it's all a question, diversification is everything. And we see now when the institutionals are moving in, they want to go one step further then also into how they automate the trading, having then connection directly to their trading and so on. But that's a discussion also we can take here later today. But is peer-to-peer lending actually peer-to-peer lending when institutions are lending? It is, but it's different. So Fixura as an example of a fintech industry company. It's a peer-to-peer lending company. It started out, I wasn't the founder of the company. I'm a business angel also. I founded quite many companies also in the financial area. But I still remember when the founders called me and said, Kai, would you be interested in this peer-to-peer lending? I said, no, doesn't sound like very exciting to me. But actually they managed to convince me. And the biggest challenge what I saw, because normally with a business idea, having one customer area and customers and to really get them into clients is tough. But in peer-to-peer lending, it's actually two. It's the lenders and it's the borrowers. And that's tough because you're doubling the challenge. And they have to match because otherwise they don't have any business. So we thought a lot about this when we started out. But it's been growing quite a lot. And for a small country like Finland, it's almost 1% of the population who actually are registered users of Fixura, 55,000. And also the lended volume today is almost 50 million. And what do we want to do? We actually want to move lending into where it was before. What was lending before? You went to your neighbor hundreds of years ago and say, hey, help me out with this one. Can you lend me some money? And then you lend the guy some money and so on. But then the banks moved in, and there was a reason also for the banks moved in, because you needed to share the risk and get the diversification. And that was what banks brought, so you could actually manage. And you see, that's everything here. I remember when we started out with Fixura, we recommended to have at least 10 loans where you invested. That's way too little. You need hundreds of loans to really get the good risk-adjusted returns. And to have hundreds of loans, you need a lot of technology, because that means splitting up 1,000 euros in 100 loans is 10 euros per each, and having directly those matched. The Finnish market, consumer loans, it's quite a lot. I think the German market looks the same also. It's 39% of the people have consumer loans in different forms. It's 14 billion only in Finland. And then on the investor side again, interest rates are what they are. People are struggling to get the returns. It's been pretty good in the equity sector so far, but that's also tough now. So where to get the returns? So here kind of is the perfect match. It's a very, very good timing also for the sense where the markets are standing today. What is this doing? It's actually cutting out a layer. It's a platform matching borrowers and lenders. And that's what it does in a very efficient way. So far, all our borrowers are coming from Finland. On the lender side, we have 20% coming from around Europe. And surprisingly, 14% is Germany. We have repaid the amount of 25 million, so we have very satisfied clients. And it's not a question only about the return, but it's also pretty nice to have the cash flow coming every month, the amortization and the interest rate. The con side of this is, of course, that you lock up your capital for a long time. It's 2-3 years, but you have a return on it. So what's really compared with the normal player, peer-to-peer lending, why is it attractive? First of all, it's 24/7. You can do it anytime. Of course, can as a bank also do it anytime, but it's very practical. You do it like we heard here also. It's easy to take a loan over the mobile phone at any moment. It's also a question of efficiency. And here's about also with the regulation question that it's a tough environment for the banks with their own capital requirements and so on. The question arises, can you compete with a platform that don't have it? And how would the financial system look like being built on a peer-to-peer basis? Maybe the taxpayer doesn't have to jump in. It's a very fast growing maybe for these reasons also. What we've done also compared to many other is that you can open up a little bit how you do the business. So instead of what says that you have to have a fixed interest rate, if I have a certain rating as a borrower, and maybe the system says, yes, statistical and risk-wise, you should have 7% interest rate on this unsecured loan. Maybe, but maybe I say, hey, I'm not in a hurry to have this loan. Maybe I say, hey, I put it into the system, I say, I offer only 6. And I know maybe it takes 3 weeks before I get it. Or maybe I say, I want it now, and I'm prepared to pay 8%, and I get the money right away. So it's a function then more about the time aspect. And you can do a lot of these things instead of the old fixed way of doing things. What we are looking to is very much also, when we go abroad now, we have clients already here, but the markets are different. They are definitely different. They are different also from regulation perspective. I definitely think we're going to see quite a lot of efforts also to harmonize this now as the business is growing in Europe. And it's important to have playing rules, because now you have like you need banking license maybe in Germany and you don't need nothing in Finland. Is this good? No, it's not good at all. We need rules for playing. We also look into new products, because you don't necessarily have to do it the way it was done always. What says that you always should have a fixed interest rate? Maybe the interest rate should be based on how good you pay back the loan. We are also looking through, the interesting thing is also that it's growing by itself quite a lot. Because as the investment is automized, 95% of the money paid back and interest rates every month is reinvested. And this means, of course, that the invested amount grows quite a lot. And what we are seeing, we have more and more requests from the institutional side, like I mentioned. We have also seen US already funds and institutional funds that are set up only investing into peer-to-peer lending. And then we come back to the question, like I said, what is peer-to-peer lending? What we are looking for here very much, and I think it's a very good venture for that here in Frankfurt. And for us coming from the Nordic perspective, Germany is a very natural place to be and interact. And what we are looking for is strategic partners now, both on the lender side and the borrower side for the growth. It's distribution partners, and also talents. As we are moving abroad also, it's all about people. And this is something also what I'm looking forward here to discuss with you here today. So thank you very much, and looking forward to a very interesting day. Thank you for the opportunity being here.